Right guys, welcome back. Today we're going to go through a trade breakdown, 8% Euro USD. Give it a watch, we'll roll the intro and then we'll be back in a sec. Right guys, welcome back. So today's video we're going to do a trade breakdown. This is Euro USD, 8%, 1% risk, 8% profit. I'll show you exactly what I looked for to find this trade, basically why I entered it, and to see if there was a second possibility, a second trade that we could have actually got if we were here or whatnot. So let's get straight into it guys. So let's jump on the daily and just show you the daily at the minute. So we are currently in a downtrend. As you can see here, we've got lower lows there. So we've broke this low here. Well, it's kind of there. Yeah, we've broke that low across there. So yes, there might be a retracement soon, but this is the daily. Remember, we're only day traders, so we just want in and out. And this might not retrace all the way back up. Sorry, for weeks. So I was still actually looking for sells at this point because we are still going down and we've just took some inducement, so some false sellers pretty much. So let's get on the 4 hour. So knowing that we want sell. So by the way guys, that is the trade. It was 10 pips and an 80 pip hit. So we'll get rid of that for now. So here we go. So this is the 4 hour. Euro USD 4 hour. Now the first thing that I see straight away is like we can map a bit of market structure, but I won't go mad on it. But you can see the basically highs that have been took and then it's sunk. That is your swing points. So that took that high, then it sunk. That all got liquidated and then it sunk. That got liquidated and then it sunk. So you can see like we've got a bit of a trend line here when the magnet, well, it didn't want to work, but yeah, that got liquidated, it took it out, it sunk pretty much guys. So the kind of next areas for me to look at for sells were, if I zoom in, the closest zones basically. I mean I could technically get rid of that, but I like to keep it on there. Just, I don't know, it's just easy. So basically, this blue candle here, that is your extreme supply area because this has been tapped. This area has been tapped. That's been mitigated. There's no real reason to go higher than that just yet until we actually know that we're buying. So we still want to look from sells from these areas. Even if the bias has shifted completely to bullish now, you can look for a good day trade sell from these supply areas. So that being said, that is a nice 4 hour 4 hour order block. And what I like to do now is I like to add the imbalance. So the imbalance is basically, you look closer here, the gap from this candle to where it's been actually wicked in the past, that is imbalance. So this grey area now, that is all imbalance. And sometimes price just responds from imbalance because that's where orders are sitting. So what I like to do is I like to take the extreme zone, which is this 4 hour candle, and the imbalance of that 4 hour zone, and we string it all the way across. And obviously you can see we've hit and we've sunk, hence the trade. But I'm not just going to go, there you are, it's hit that, you know. I want to see why. So as we were approaching this kind of 4 hour area and imbalance zone, we dropped down to the 15 minute. And we have a look across to see what areas there's a bit more interest in. That's the wrong one, that's our trade. We'll get to that in a minute. So this whole area, guys, is the imbalance and the 4 hour zone. So straight away, I can see Where's my tool? So we've got a 15 high there. We've got a low here, which was just a liquidity sweep, and then we've got high, low, bit of a high there, a low here, and then we've got a high all the way up there, and there, and there. So what I can see, the main thing I can see, the main order block I can see here is this. Basically, this area is a big buy to sell move. So the market, let's go big there. So the market has actually forced this down with such pressure that we've took basically all of them levels out. And then at the same breath, it's pushed straight back up, which tells me that that's a, I can't even think of the word, but you know, the big banks, the, begins with institutions, I've just said it, but yeah, that's the institutions that have pushed it down, pushed all that pressure down really, really fast. Basically, everyone's been stopped out pretty much. And then we've bought, and then everyone started to buy again, and then we've sunk from that. So that area was a massive interest for me. And the extreme of that area leads us to this 15-minute candle. And we have got this little bit of imbalance there as well. So we could mark that as well. And obviously you've got imbalance and a little candle, a little buy to sell candle up here. But that buy to sell didn't actually get past the imbalance here and touch. That didn't actually touch this demand zone. It actually flew through that, and then this was the area which it was bought to sell, sold. Bought to sold, which was buy to sell. So anyway, enough of me waffling, and let's not load the charts full of rubbish. So this area was a biggie for me. So we line this across. Right, we line that across. And as you can see, nice and simple, we started to approach it. So as we approached it and we actually tapped it, we then dropped down onto the 1 minute, because our 15-minute zone is now being tapped with a 15-minute candle. So now we can actually drop down to a 1 minute zone. And now I've got to keep scrolling out till I can find it, because it's not the quickest trading view with that. Right, so let's zoom in and imagine this is any chart. So we've tapped the zone. We don't care about anything from the left before the tap of the zone. So we've tapped the zone here. Let's put some highs and lows on so you guys can see. So obviously this is a bit of a swing low. We've got a high, a lower high, higher high, lower high, blah blah blah. You know the drill. So then we've got this, but then we've got this low here, which took it out, which is almost like a fake chock, so a fake change of character. We then wick them out completely. So I would ideally be waiting for that to break another structure before I was in, but luckily enough I wasn't in at this point because it would have wicked me out. So there we've got, that is a liquidity. In fact, that is a sweep, because you can see with a candle with a wick. Let's just make that so it's clear. 2 seconds, guys. Right, that should be good. Yep, so we've got the sweep. This is the 1 minute. We've tapped the 15-minute, which is a part of the 4-hour sell bias. So 15-minute, 4-hour, and the 1 minute, we want it all to align before we sell. So we've broke this, but then we actually tapped in to this zone here. We tapped into that area, and then it shot up, it wicked it, which looks like a definite liquidity sweep to me. Then we broke the low. Then we broke this low now here. So that's a new chock basically. And then we respected, oh, I'm trying to think where it was, right. And then we respected this candle. So we respect the buy, and then we sold through that. So that is the second break, guys. So the first break is the chock, the second break is the boss. So the break of structure. And then obviously we've got an area where we could respond from here. Now, we actually tapped this. What was that whole candle there? So we actually tapped this and bought. So it was actually at this point that I entered. I entered soon as this little candle had bought and then closed. I entered there because not only are we in a higher time frame bias to sell, we've actually tapped the 4 hour zone, we've tapped with the 15-minute zone with the 15-minute candle, and we've took a liquidity sweep from the 1 minute, which shows me straight away that we could be looking at sells. And then to help our confluence as it is, we took the change of character, so we took one of the lows that made the high. We then respected a supply zone, which you can see is this block here. If I can highlight it, that one, that's the supply zone that's been respected. We couldn't break that, which means sells are in play. We then took the low of that, which becomes basically the second break, which is the break of structure. So the first one, the change of character, and the second was the break of structure. We then responded. We had a little bit of a response to this demand zone, which is good because you want to see a bit of a response before the power pushes through. And then soon as we buy from that area, we know we've already had 2 breaks of structure and we're looking for sells overall. We can then drop a sell in. I had a 10 pip stop loss, which isn't tiny, but you cover yourself just in case these 2 highs, guys, just in case they get liquidated, because what could happen is something like this. So you have to cover yourself for the worst kind of scenario without going with a massive stop loss. So 10 pips stop loss, and to get the target, we zoom out, we jump on the 15-minute, and pretty much. So the next zone, the next zone that I'd be looking at, really, I believe there was this one. I will double check, which we actually, as you can see, we wicked from. So I went to around about there. Yeah, so I rounded it off 8. Here we go. So, and we always tap the zone a bit anyway. So, and if it gets that close and I'm worried, if my TP gets so close to touching but doesn't and I worry, then I'll just close it. Because at the end of the day, guys, for the sake of what it might be, 30 quid, 50 quid, and you've made so much, just take it. But anyway, luckily enough, obviously, guys, it hit. Otherwise, I wouldn't be doing the video on why this trade won. But we've lost it again. Let's go. Big. Yeah, and then it completely sunk, guys. I could have, yes, I could have let it go to 15%, which is quite a lot on a funded account. Or you could go to the next imbalance zone, which, if you see, is this zone here. So you could go to that, or just kind of take the profit when you want, in a way. You know, it's profit's profit at the end of the day. So, and what I said earlier, let's have a look to see if there is a second trade that I could have took if I was on the charts, or if I can't even talk, but if I wanted to, basically. So, I mean, I'm trying to make these videos quick, guys, but we're already up to 13 minutes 43. So I'm trying my best, but I want you guys to learn, and I want you to take it in. I want it to be as clear as possible for you. So, second entry would be when this 15-minute, because this is the current 15 swing low, when that gets broke, and as you can see, that is another break of structure. So let's go on the 1 minute again, and let's see if there's an area that we could have got. Right, so let's zoom in. Let's have a look. So the break of structure, guys, 15-minute break was there. It was a slight wick, so let's have a look what we've got. So the body broke it at this point here. So at the minute we're down there. So what we want is we have a look to see basically the extreme of this zone that broke the 15-minute low, and we accept the imbalance with it, like I said earlier. So which is this area here. You have to be careful as well, because I've just seen this wick and these candles, there is some liquidity there. So that being said, we want to basically cover our arse. So this candle here, with the liquidity where it's not been tapped by any wick, move that across. I won't mark it on now, but we would have put a sell limit there, and then it's probably the same again, to be honest, guys. Let's stay reserved. That's 10 pips, and that covers quite a lot. In fact, that's probably 2 reserved. So you could have got a 5 pip, which covers you for a little bit of liquidation. You could either aim for the low, just in case, which gives you basically 2%, or you go for the same profit area. So let's go on the 15-minute again. Let's go big screen. And yeah, don't forget, guys, like and subscribe, much appreciated. Get the algorithm going. Get these videos watched, and I'll do more and more. The more videos that get watched, the more they get watched, sorry, the more videos I'll do. Right, same area as we originally targeted. So let's stick that without being greedy, because live market is a whole different ball game. So let's leave that. So then you aim for the same area, and as you can see, you've got a better reward. You go to 13. So that's basically 21%, guys. And if that's 1%, if you're on a funded account at 100 grand, then 21 grand for, let's have a look, if this is going to let me. So we actually entered around about there, it was. Both of them hit within 7 hours. That's £3,000 an hour potentially, just from zooming in, looking for higher time frame areas, bias, and then zooming in at the time you need. Let's have a look at the time as well. So the second entry was at 9 AM, perfect. Most of you guys, especially UK based, are on the charts between what, 7 and 10, which is your best time for moves like this. The first entry, I can't remember exactly when it was. Let's have a look. I think it's moved over as well. Yes, of course it has, because TradingView likes to do that to me. So the first entry was over there, which was at, yeah, 8:30. So I think I put the trade on, and then I went to get some breakfast and whatnot. And unfortunately I missed the second entry, but at the same time, I got 8% from this. So yes, I'm annoyed I didn't get a second entry, but at the same time, it's sunk, it's profit. But yeah, so hopefully you enjoy that, guys. 8%, you could have got another 13% possible. But yeah, any questions, drop them down below. There's plenty of other videos for you to get through. Hopefully I don't waffle too much in them. I'm trying to make these videos quicker, but I'm just a normal guy doing normal videos. For wins and losses, I get both. But yeah, anyway, I'll catch you on the next one, and thanks for watching.